This is a slide that if you have an accounting system set up by a tax CPA, you need to show them this and say, I want my accounting system to produce this kind of a report. And the reason for this is the standard B2B SaaS cost structure financial statement. This is not just something that we made up. This is straight out of Pacific Crest, KeyBank research. This is what the industry is expecting. If you go on and take a look at some of these, publicly traded SaaS companies, you're going to see a very similar income statement. And the reason for this is this gives you all the information you need to measure yourself as to how well you're doing as a company. And it starts off with your bookings versus your recognized revenue. We've all heard about GAAP revenue when it comes to SaaS. It's something that's near and dear to the CPA's hearts. Most people don't really pay much attention to it. They're looking at what's the invoice volume that's coming through. So you know what? The easy thing to do is have an income statement that shows both, and you can do it. You show your gross bookings, whether it's recurring software, if you're charging services, if you've got non-recurring software like setup fees or something like that. And then below that, you have a single line item that says, here's what we need to adjust it for GAAP, and here's what our book income is, or our GAAP income. Right immediately after that, this is one that's really big, is gross margin by income type. If you especially have multiple revenue sources, you really want to know what your gross margin is by revenue source. So you've got production, that's your actually delivery of your system to your customers. So it could be your AWS hosting and things like that. Delivery, what does it cost your folks to stand a customer up and get them up and running? And then that retention and support piece that comes afterwards. What does it take to keep them happy? And what does it take to get them to renew? And you really want to focus on those three particular buckets in particular. And then below that, you have the major research and development, sales and marketing, and G&A. Those are what we call the departmental expenses. You really need, you need your R&D broken out so you can claim that tax credit correctly. You need your sales and marketing because you have to have CAC and you have to have a whole bunch of other metrics that are based on sales activity. And then you need to keep a real close eye on that G&A expense and make sure that it's not taking a real big drag on your bottom line, getting to that net operating income. So if nothing else, and I'm a big fan of QuickBooks because it's very easy. The reason why I like QuickBooks is you can fix it. If something's broken, you can go in and change it. It's a very easy and forgiving system, especially for startups, and I can't say enough more about that.